It seems to me, Paul, that nothing's changed and that the only true safe, financial safe haven when this crisis comes is going to be physical gold and physical silver and maybe just hard assets outside the system. Is that the way you see it?
I know people feel we've had enormous amounts of false dawns, and I can appreciate that, but just ask yourself why gold is at record. Oh, well, okay, it's not quite at a record high now in dollar terms, or not far off in euro, or the pound, or the yen, or anything else for that matter. There's a reason for that. And it's ironic that it is what it is.
Recent analysis from Mario Innecco paints a sobering picture of the global financial landscape, where the cracks that once seemed manageable are now threatening to rupture the entire system. He stresses that policymakers have trapped themselves in a cycle where intervention is no longer a choice but a necessity, because the moment they step back, the social and political costs would be unbearable. Rising costs of living, fragile job markets, and overstretched household debt mean that any sharp economic downturn could spark widespread unrest, something governments cannot afford to risk. But each new bailout, subsidy, or central bank injection only deepens the problem, creating the appearance of stability while feeding the very forces that will eventually bring the system down. Innecco warns that this cycle of artificial fixes has left the financial order fragile. Looking back at 2008, Innecco explains how that crisis set the precedent for today. Instead of forcing banks and institutions to reckon with their reckless bets, authorities chose to save them, embedding moral hazard into the DNA of the global economy. Since then, speculation and debt have been rewarded while prudence and discipline have been sidelined. The difference today is that the vulnerabilities extend far beyond housing or banking. Governments are drowning in deficits, corporations are leveraged to the hilt, and consumers are straining under credit obligations that cannot be sustained in a slowing economy. This is why Innecco emphasizes the timeless value of hard assets like gold and silver. Unlike currencies or bonds that can be manipulated, printed, or defaulted upon, these metals stand outside the reach of central bankers and politicians. They have served as anchors of wealth through every major upheaval in history, and in today's climate of growing mistrust, their appeal is only strengthening. As faith in the financial order erodes, people are seeking assets that cannot be devalued by decree or destroyed by debt. The world may not be heading for collapse in the apocalyptic sense, but it is heading for the collapse of a financial order built on credit, intervention, and illusions of stability. Before we dive into Mario's sharp insights from his latest interview, make sure to hit that subscribe button and tap the bell icon so you never miss a moment when truth meets the market. Let's get into it.
Yeah, absolutely. I've, always made that point. I don't get into price predictions or, we're not here giving people financial advice. That's just my personal perspective. I know people feel we've had enormous amounts of false dawns, and I can appreciate that, but, just ask yourself why gold is at record. Oh, well, okay, it's not quite at a record high now in dollar terms, or not far off in euro, or the pound, or the yen, or anything else for that matter. There's a reason for that. And it's ironic that it is what it is, and they're still sat there going, but everything's fine. You don't need to worry about anything. The economy is doing incredibly well, and there isn't anything to be concerned about. Well, that just demonstrates that alone why that is a nonsensical statement to make. And therefore, you have to do what you can and be prepared in any way you can, but that's a personal choice. There's plenty of people out there who think, Bitcoin's the future. Well, okay, if you think that, that's your choice. I think everybody knows my perspective on that. But that's a personal opinion, and if you want to think differently, I don't have a problem with that. But I think at the end of the day, history will prove that hard assets and yes, there might be other resources that people could invest in potentially if they think that's the case. But as ever, we're not here to tell you what to do. Make your own decisions and go and talk to people who you think can give you the level of advice you require. But it's inevitable that everything associated with financialization, which is enormous, is not going to survive. It's impossible, because at the end of the day, you can't just keep creating bigger and bigger bubbles and thinking there are no consequences for doing so. Yeah, eventually everything has to return to the true mean. And if you look at what happened in 2008, and when we had that correction, that return to the true mean was a drop in the ocean. It's so off scale compared to what it was in '08. And look at what happened in '08 alone. So you can't expect it to be less of a problem this time around. It's going to be significantly more. And also because now it's an everything problem. There is nothing in the West that isn't a problem, whether it's the currency, whether it's financial system, whether it's commercial real estate, whether it's retail real estate, whether it's the real economy, etc. So everything is in serious decline. And all of those things are going to varying degrees impact the financial system and what happens to the broader economy in the future, and therefore underpins everything we've discussed. And that is a statement of fact. There's no way anyone can refute that. So, and when you don't have a currency crisis in the making or ongoing as in 2008, it's very hard to pinpoint fixing in inverted commas, even though it isn't, and saying, well, we need to do this to repair this problem. And they don't all require the same solution. And what you think you can temporarily fix one thing will blow something else up in the process. Good luck finding a way of digging yourself out that massive hole. And that's the problem the West faces as well, is sitting there and understanding that it isn't just a one issue problem. It's multifaceted, and not one solution will fix all those problems on a temporary basis, or just a repair to stop the dam breaking in totality. Never mind the long-term or medium, short-term consequences of why that fixes nothing. It's always, I find when we do things, it kind of stimulates interest and you think about things, and at the end of the day, it's it's like what you're doing, Mario. You're trying to get people to better understand the reality of what is going on. But at the end of the day, despite all the things that are going on, just try and enjoy your life as much as possible. Don't be totally consumed by it all, because that's not healthy either.
No, and the thing is, the stuff we've talked about here seems very serious and concerning, but it's not like the end of the world in itself. It's the end of the financial system. And that, even though is a huge task to rebuild it, it's not the end of the world. And like you said, you need to enjoy life. And just look at the old Soviet bloc that collapsed in the late 80s, early 90s. But now they're in much better shape, I think, than we are. So
yes, ironically, yes.
The geopolitical landscape is shifting rapidly, and the United States now faces the uncomfortable reality that rapprochement with Russia may no longer be a matter of choice, but of necessity. Beyond the strategic balance of power, Washington knows that access to Russia's vast energy reserves, particularly in the Arctic and Far East, could play a decisive role in shaping the future of global energy security. Yet, Moscow has been clear that Eurasia's security architecture cannot be dictated solely by NATO or Western interests. Instead, Russia insists on the principle of indivisible security, effectively declaring the old model of unipolar dominance unsustainable. As Mario Innecco has pointed out, the U.S. finds itself at a crossroads. Either recognize the irreversible rise of multipolarity or risk irrelevance. Far from being weakened, Russia has adjusted to years of Western pressure by strengthening domestic industries, turning to the global South, and securing new trade corridors beyond the West's reach. The failure of U.S. policy becomes even more evident in its dealings with India and China. Washington has attempted to pressure both nations into cutting ties with Russia, but the results reveal how limited American leverage has become. India, faced with tariff threats, not only refused to comply, but expanded its imports of Russian energy to record highs. China, in turn, dismissed U.S. pressure outright, emphasizing its independence and its own long-term strategic vision. These developments expose what Innecco and other analysts have long argued. Sanctions, once the cornerstone of U.S. influence, are no longer the formidable weapon they once were. Instead of isolating Moscow, they have encouraged a deeper integration between Russia and the non-Western world. This is not simply a diplomatic challenge. It is a signal of how dramatically the global order has tilted away from Western dominance and toward emerging alliances built on mutual interest rather than coercion.
The first one, what could cause a collapse and when could it happen? Well, I totally agree. There are many factors to this, but the bond market, absolutely. And we can see what's happening, ironically. Whatever people's perspective is on trust, the yields are higher now. So my argument is, why isn't the Bank of England intervening again? Why did it have to intervene during her very brief administration, but not at this point in time? There's a lot of unanswered questions, but it's not uniquely the United Kingdom, although the UK's yields are far higher and it's far more problematic. But the United States faces the same problem, and European countries are facing the same problem. And of course, one of the big problems with the Western financial system since 2008 is they basically lassoed everything together. So if the United Kingdom's in major trouble, it's going to take the United States and Europe with it, and vice versa. If it's Europe, it'll take the United Kingdom and the United States with it, and obviously the same with the US. So yes, I think the bond markets is an enormous problem that's not going away. And we should also factor in what's going on with Japan in that regard also. What we also shouldn't lose sight of with regards to the general issues with the financial system is, I think, subprime never went away. In fact, I think subprime's worse now than it's ever been. So could we have another subprime crisis? I think so. There is certainly very clear indications in pockets of the West, should I say, that we've got serious problems in the housing market. We've got serious problems in commercial real estate. That's big enough, I think, to blow things up as well in the process. I mean, vis-a-vis not entirely what caused 2008, but it's a significant reason. I also think there are enormous problems in the private equity sector, which is not regulated properly. There's a lot of things going on in there no one has any visibility of. I think that's an enormous problem in the making. Also, just the amount of leverage that exists. I mean, we've got situations where we have sectors with leverage of 100 to 1 and this kind of nonsense. This is not sustainable either. And the risk of huge margin calls becoming a huge problem in any facet of the financial system is another huge problem in the making. And just generally, one can argue that the real world is cratering rather rapidly. And that alone can actually accelerate a huge financial crisis, because the one thing the pandemic showed to us rather clearly is they sat there and went, well, if we don't do something, everything's going to go. The real world will just completely melt down in totality. So let's bail everyone out. I remember being there with my own business, and I got phone calls literally every other day going, just claim the money. I said, I don't need the money. No, just claim it anyway, because you might need it in the future. And I go, I don't need it.
Yeah, I remember it was £50,000, right?
Yeah, and just, constantly just take. So they were terrified that everyone was going to go to the wall, every business, everybody would be destitute. Now, their instinct is going to be, when suddenly a massive problem happens again, they're going to go, we just need to bail everything out. But the argument is this time it's going to be infinitely worse than what happened during the pandemic. So, so what happens if you start printing trillions, tens of trillions, of euros, pounds, dollars? It's not just what it does to the currency, but what does it do to the broader financial system? I mean, also there is a huge lack of confidence now in the US dollar, US Treasury complex. I mean, we've even got cases where the Europeans, even US institutions, are going to Europe getting euro-denominated debt as opposed to US dollar-denominated debt. That's another enormous problem that's in the making. And we're increasingly seeing countries in the global south saying, well, we don't want to settle this debt in dollars anymore. With the Chinese, can we settle it in the yuan? And they found a way around doing that as well. So that is a huge problem. And therefore, if you start having to print trillions of dollars, they think, to stop everything collapsing, that is going to also, I think, precipitate a complete crisis of confidence in currencies. So what that therefore can have enormous implications also. Now that might seem a bit extreme, but what are they going to do? Like just ignore it and pretend it isn't a problem? Of course they can't do that. So anything really that is related to financialization, yeah, bond markets and all the things I've mentioned are obvious things, but anything that, what the derivatives markets and everything that encompasses is being some horribly stinky problem that has never gone away. It's also arguably questionable as to how that hasn't completely eviscerated financial systems in the process over the years, given everything that's happened. So that's something else to contend with. But it's just basically all the leverage, all the margin, all the enormous risk taking that has never gone away. And I maintain private equity is the silent killer as well in all this. So they're just some examples of problems, but if you want to drill it down to...
Gold and silver stand at the heart of a major financial transition, drawing renewed attention as trust in paper-based systems erodes and the vulnerabilities of global debt markets become more visible. Gold continues to serve its timeless role as a universal store of value, a safeguard against the inflationary pressures and policy missteps that frequently undermine fiat currencies. Silver, while sharing gold's status as a monetary metal, carries an added advantage through its indispensable role in technology, energy, and industrial innovation. This dual identity gives silver a unique dynamic. On one hand, a safe haven for investors seeking protection, and on the other, a material necessity for industries that will shape the future economy. What often surprises markets is silver's ability to outperform gold once confidence truly begins to fracture, as its lower price point makes it accessible to a wider base of investors, while industrial demand provides additional upward pressure. Throughout history, both metals have thrived during periods of monetary instability, but silver's tendency to surge late in the cycle often creates explosive moves that catch mainstream analysts off guard. That's it for today. If this video provided value, please like, share, and comment below with your thoughts. Your perspective helps deepen the conversation and keeps everyone informed.